There is little to no benefit of copy trading if you have not taken a payout yet. There is possibly benefits after you've taken a payout because then you're not really playing with your own money, you're playing with the money of the prop firm, but that's a conversation for a different video. Today we're going to be talking about what method you need to use if you have multiple accounts that you have passed and you want to get a payout as fast as possible with as little leverage as possible. Over the weekend, I went down to London and I got a chance to listen to trader Kane. And he made me realize a few things that I thought I'd just share with you because chances are these things apply to you as well. Oh, I really miss Australian coffee. Now, the main thing he made me realise was that I probably, and you probably, shouldn't be copy trading. Now, I'm just going to use myself as an example here. I have 5 50k accounts, and I have yet to reach a payout with those accounts. So the logic I took away from Kane's talk that I'd listened to him do over the weekend was that if I've not had a payout, then why should I be increasing my leverage across 5 accounts, which have all cost me money? I've paid activation fees, I've paid monthly fees to pass the accounts. I am increasing my risk for really no upside because the chance of me actually getting a payout whilst copy trading with 5 accounts is actually lower than if I just traded them separately and used the method that I'm going to explain to you in this video. Now, this method does probably exist, but I'm just going to kind of give it my own little name. I've not really watched a video on this at all, but I'm going to call it the rotational method. And that method, it helps if I actually spell it right. So, what is the rotational method? This is where you're going to have multiple accounts, in my case, 5 50k accounts, and you are only going to trade one account at each time. So let me break down how this is going to help you in your actual trading. If you are copy trading and you are risking $100 across 5 funded accounts, then you are risking $500 across your entire portfolio. Obviously, $100 on one times 5, $500 risk across your entire portfolio of accounts. Now, this is all well and good if you're confident in your edge, you have no downside, you're playing with house money, then you can build up more accounts at one time, and obviously down the road, you're going to be able to take one really big payout. And that's all well and good as long as you're playing with house money and you can manage it psychologically. If you can't, then I'm going to suggest you use the rotational method, and this is the method that I'm now using going forward. And on the rotational method, I'm going to be using $200 of risk per an individual account. So I'm basically trading one account, I'm either going to win or lose on that account, and for me, I'm going to allow myself 2 losses per account or 1 win. Once either of those things are met, I'm going to switch to the next account in my rotation. And since I'm trading with $200 of risk, then obviously that is my maximum risk at any one time compared to 500. So across my entire portfolio on any one trade, I'm actually less than half the risk compared to the copy trading method. And in fact, the upside is much better for me because I'm risking $200 on this account. So this one account, if it wins, is going to be much better off than each individual account when copy traded. So to break that down, basically, if I'm using the rotational method and I take a win, that account is closer to a payout because it was able to risk more. Whereas if you're copy trading and you take a trade, all of your accounts are a little bit closer to a payout, but not as close as if you were to use the rotational method. Obviously, you could just say like, oh, well, just use $200 risk on copy trading accounts, but then you're going to, 1, increase your risk of ruin because you're going to be over leveraged at that point, in my opinion, and 2, that's a very big psychological barrier that you need to be able to deal with. Like, I don't know if I could manage risking $1,000 per trade, at least me personally right now. Oh, that coffee hasn't gotten any better. So I will be switching accounts after I've had 1 win or 2 losses on each account. Then I will come across here to my next account, same thing, 1 win or 2 losses, and then I will go to the next account, same thing, 1 win, 2 losses, you get the idea. And I'll just go in circles around my accounts. Now, one other thing that I'm doing during this is that I am trading each of my accounts dependent on their current drawdown. Since I pass them at different times, they are at slightly different levels of drawdown compared to each other. So I have 3 accounts that are healthy to moderately healthy, and I have 2 accounts that are, I would say, wounded. They are quite significantly in drawdown. So I'm labeling the healthy moderate accounts as my push accounts, and I'm labeling the wounded accounts as my guard accounts. And all that means is on my push accounts, I'm going to be risking $200 on the initial trade and $300 on the second trade if the first one was a loser, and then basically just half of that for the wounded accounts. And that's just going to enable me to push the accounts that are closer to a payout while building the accounts that were wounded back up, and then further down the line I will push them again once they are closer to a healthy account balance. So I hope that made sense and you were able to learn something. This is how I'm going to be treating my funded accounts now until I have a couple, maybe even 3 or 4 payouts under my belt, because it just makes sense to do it this way. Rather than copy trading, I'm just causing myself so much more stress that is unneeded and so much more risk that is just not needed because of the things I've explained in this video. So I hope that helps. I hope you learned something, and if you have any questions at all, then feel free to comment them down below or come and chat to me in the streams. I'm more than happy to answer any of your questions. But that is all from me in this video, boys, and I will wish you good luck, good trading.